What's up everyone, my name's Robbie, this is Robbie Manila, and today we're talking about the best large cap growth ETF. This is a continuation of a series that I'm doing on the best large cap ETF. So we did the best large cap value ETF. Watch that after this video if you haven't yet. Today we're doing large cap growth. We're gonna probably do a large cap momentum coming up next. So thanks for tuning in to the series. Now let's talk real quick about growth versus value. So right now you're looking at an article from Morningstar that shows value versus growth. Now what we're going to do is we're going to focus on the top here because this is large cap value and this is large cap growth. Today we're talking about large cap growth, so I wanted to kind of discuss real quick before we get into the actual ETFs is how growth has performed versus value. Now if you look on the 1 year, the 3 year, the 5 year, and the 10 year, what this is telling us is that value has underperformed each of these years. So for example, let's go to the 10 year to kind of go out the furthest here, and we can see that large cap growth had a 14.66% return for the style group versus value style group, which was 9.40, which means that growth outperformed value by 5.26. Basically what this is really saying is that value underperformed growth by negative 5.26 percentage points. And as you can see, if we go back 5 year, 10 year, 1 year, it all happens. And this is, by the way, about a year old. So this doesn't show 2022 data. This shows 2020 year over year data. So as of recently, over the past 10 years, over the past 5 years, growth has done a way better job than value has done. However, I do think we're in a new cycle, and I think that's going to need to play a big part on the ETF we're going to choose today as the best ETF for large cap growth. So anyway, let's go ahead and let's get this thing started. Let's get into this, and quick question for you. Comments below, please let me know what you think. Do you think growth is going to outperform value this year, or is value going to finally outperform growth? Let me know in the comments. Love to hear from you. All right, here we go. We have 5 different ETFs we're comparing today. We're going to figure out which is the best large cap growth ETF. We're going to be starting with the first ETF. We have Vanguard Growth Index Fund ETF shares, which is ticker VUG. We have the Vanguard Mega Cap Growth Index Fund ETF shares MGK. We have the Spider Portfolio S&P 500 Growth ETF SPYG. We have the Schwab US Large Cap Growth ETF SCHG. And finally, we have the iShares Russell Top 200 Growth ETF IWY. As you all know, we usually start with the expense ratio, so let's check that out. So first we have VUG with a 0.04% expense ratio, MGK with a 0.07% expense ratio, SPYG 0.04, SCHG 0.04, IWY 0.20. So as per usual, first thing we want to say is, does IWY justify a little bit of a higher expense or does it not? Let's talk about weighting schemes because these are a little bit different. So we have multi-factor for VUG, multi-factor for MGK, we have market cap SPYG, market cap SCHG, multi-factor for IWY. What is multi-factor? What is market cap? So market cap weighted means that the larger companies, so companies that are like the largest companies in the index, are going to have a higher weighting than smaller companies that are in the index. An example of this would be Apple, because it's such a large company in terms of market cap, would have a much higher portfolio weighting than a company like Chipotle, because Apple's much bigger than Chipotle. A multi-factor strategy is going to have a different weighting scheme, and it's going to be really dependent on the actual fund company. An example might be that they're tracking an index, so they're going to have at least only stocks inside the index that they track, but they're going to weight how much money goes into each of the different companies differently. Now this could be on multiple different factors, so revenue growth, free cash flow growth, just different ways that they could potentially be weighting how they're going to add these into the portfolio, how much money they're going to put in each of these companies. So okay, let's move on. So now let's look at the yields. Because these are growth ETFs, they're not going to have as high yields as a value ETF might. So we have distribution yields for VUG 0.53%, MGK 0.45%, SPYG 0.67%, SCHG 0.46%, IWY 0.55%. All very similar yields, but SPYG does have a little bit of a higher yield than the other ones, and they all pay distributions quarterly. From a fundamental perspective, when we're talking about how cheap or how expensive these funds are in terms of things like earnings or book value, VUG and MGK are going to be a little bit more expensive in terms of earnings, so the price to earnings multiples are a little higher. SCHG slightly lower than VUG, MGK. SPYG with the lowest in terms of earnings. In terms of book value, and SPYG is the cheapest in terms of book value. Also, in terms of revenue, it is not the cheapest. That is going to be SCHG, but also it's pretty low, comparatively speaking. These aren't very new ETFs, so it's good that we can actually look back and see how they performed over a decent period of time. Right now, I'm looking back to October of 2009. As we can see over this time period, IWY has had the best return at a 634% return, MGK with a 580% return, SPYG 561%, VUG 555%, and SCHG at 523%. By the way, these do include reinvestment of dividends. So let's make the time span a little bit shorter and take a look at the 5-year. Here we can see IWY still has the highest return, 166%, followed by MGK, then SCHG, which was the laggard before. Now it's in the middle. VUG 144, SPYG 142. So let's take a look at the top 10 holdings of these. So for VUG, we have Apple, MGK Apple, SPYG Apple, SCHG Apple, IWY Apple. So not a very shocking coincidence that they all have Apple as their top. Apple is the largest company, I believe, right now, market cap wise. So mostly these are all very similar ETFs. Their top 10 holdings are all very similar. Next, we have sector weightings. Now, this is important to me right now based on the fact that I think certain sectors are going to do better this year. And one of the ways I'm going to kind of help decide what I'm going to decide in this video, because they're all very similar ETFs, they've had good performances, is maybe let's take a look at the sector and see if those can help us decide which one of these might be in a better position, at least for this year. And so the first thing we're going to see is these are all very heavily weighted into information technology, which in rising interest rate environments that we probably are going to have coming up soon with inflation, I'm not quite sure that information technology is going to do the very best out of the sectors, maybe at least for this year. That's at least my thesis. If you watched any of my sector videos, then you'll know that that's what I'm thinking. So the question is, what sectors do these other ETFs have that I do like? So first off, none of these ETFs are heavily weighted into energy, which I do think is going to be the best sector this year. Next up, financials is a sector that I think is going to perform well this year. SPYG has the highest amount in financials with a 6.8%. Alternatively, I don't think consumer discretionary is going to be a very good sector this year, and we have both VUG and MGK having 20% of their portfolios in consumer discretionary, where I would like to see that as a lower weighting. So let's move on. Those may help us kind of determine which one I'm going to end up going with today. But now let's take a look at the market cap. Of course, we're talking about the best large cap growth ETF. So what we want to have the majority of our assets in large cap. So do these all have large cap allocations? Well, so you can see VUG actually has some medium cap, mid cap allocations. So if you're really truly only looking for a large cap, VUG may not actually be okay for you. SCHG also has 12% in mid cap. So also SCHG may not be a very pure large cap only ETF. Looking for strict large cap, IWY is going to have probably the least amount in anything other than large cap. So IWY is going to be probably the purest of these in terms of just large cap. Next is going to be MGK, which is interestingly a giant cap ETF, but it does have 1.51% in mid cap and 26% in large cap, at least according to Charles Schwab. All right, so it's time for me to announce what is the best large cap growth ETF. So I'm going to go with SPYG. Why am I going with SPYG? So it was a close call between MGK. Now, one of the kickers was that MGK was just slightly more expensive, so I decided that I think SPYG might be a better option. And it's not necessarily just because of that. There is a couple other factors. So SPYG actually has a higher yield than all the other ETFs, which I think can be a positive in this situation. The ETF was the third best in terms of performance, but remember, past performance is not indicative of future results. And I do have opinions on the structure of the portfolios and what I think is going to actually perform better going forward from today over the next maybe a couple years. So that's one of the things I'm considering here. What I like about SPYG over some of the other ones is the fact that they have the least amount in technology, which you may differ with me on that one. So maybe you don't like the fact that they have a little bit less in technology, although it's not a lot less. But if you agree with me with some of the other sectors that are going to do better over the next maybe year or two, this is why I'm really picking SPYG for now. It's got the most in financials, which I do think is going to be a pretty big sector, pretty good sector going forward in the next, let's say, couple years as well. Lastly, just be mindful that there is 9.56% in medium cap or mid cap companies. So there's a possibility that if you're purely looking for a large cap and you really don't want any mid cap in there, this might not be the best, in which case I might go with MGK as the second on this one. If I was looking really just for a pure large cap and I really, for whatever reason, couldn't have any mid cap or medium cap companies. Let's take a look at some of the technicals on SPYG. Now, you might be a long-term investor. I am myself. So the only thing I like to use technicals for is timing entry points to things I already like. So if I have a list of different things that I like and I see different entry points that I am okay with and comfortable with, then I would like to enter those positions then. And for times that I don't think entering certain positions are very good because I don't like how the charts look, I will just wait and see a better setup basically. So here's what we got. Going back until late October of 2020, we have a very nice uptrend channel. If you've been paying attention to the market, you probably know what happened in January of 2022, mid-January. This thing fell down and broke down through the uptrend channel. The lowest close it got after that was 62.50, and we'll draw a little support line here. After bouncing off that support, it hit some resistance up here in 67.71 territory. So you can see this is a very small, tiny little gap here, and it does seem like there was some resistance in this area. So let's turn on the 50, 100, and 200-day simple moving averages. You'll see the 50-day simple moving average in green here, the 100 in blue, and the 200 in gray. We got a lot of resistance in these moving averages, so this could definitely act as some resistance for these prices in this area. Let's take a look at some other indicators. RSI, I consider this neutral. It's not overbought, not oversold, sitting at about 41. When it does dip down into this area, that means it's oversold. When it comes up above about 70, it means it's overbought. In terms of MACD, you can see we have a declining oscillator, which basically means that the MACD line is coming down closer to the signal line, and that usually is a bearish signal. If it does cross over, that's when this does turn red, and it has a tendency to have the price go down, or at least there's resistance, potentially some consolidation in that area. And what I would want to probably wait for and see is if there is a big bounce off of 62, I'd also want to check the volume to see if that ends up showing up. And if it does break down through support in the 62 area, then after the next bounce, it could be a potential good buy from there. So anyway, that's all I have for this video. Hope you liked it. Hope you learned something. And if you did, please hit that like button, subscribe, see future content like this, and watch another one of my videos. They're coming up on the end screen right now.